You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 5th day of June, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. That's our live training room, and that is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, go to mytradingiq.com, and at the top of the page, there's a button that says free trial. We're pretty creative. Click the button, fill out the registration form, and your journey begins. Doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, you will get 5 consecutive trading days in the live training room, even if it stretches over a weekend. Now that's 1 free trial for 5 days. No credit card required. Period. 1 trial. If you try to double dip, we're going to catch you. Then it's just going to be embarrassing for you and awkward for us. So, when you take your trial, be prepared to take advantage of all the resources that every one of our lifetime members has access to. So at the end of the 5 days, you'll be able to make well-informed and intelligent decision as to whether or not you have what it takes to become a trader. Now, when the live training room ends, we take a 30-minute break and we come back for this broadcast, the afternoon broadcast at 12 noon Eastern. There are 2 different ways to join this afternoon broadcast. Best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link. At 12 noon Eastern, all you have to do is click the link in the email. It will automatically log you into our platform, where you will have access to the question box so that you can ask questions and participate in the discussion. Now, there will be days, of course, when you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live. Or there will be days when you're just busy and can't join the afternoon broadcast live. Well, we have a solution for that. And the solution is the same for both issues. Point your browser to our YouTube channel, youtube.com/CFRN. It's really all you got to remember is CFRN because you already know youtube.com. Now, not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know not only who we are today, but who we've been over the years. You could scroll back 6 weeks, 6 months, a year, 2 years, pick some days at random. You don't even have to watch the whole broadcast. Just fast forward to the part where I'm doing the recap of the alerts. Fast forward to the part where Michael's doing the recap of the live training room. You'll quickly see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. That said, we'll open with a word of prayer, as we do. And our topic is changing. Last week, we talked about how to get rid of those toxic thoughts that we all have. Next couple days, we'll talk about how to be in God's will for our life. I mean, what's the purpose of being a believer if you don't know what it is God wants you to do, right? Our scripture today is John 10:27. I'll be sharing with you from the Message translation. Starting in verse 25, Jesus answered, I told you, but you don't believe. Everything I have done has been authorized by my Father. Actions that speak louder than words. You don't believe because you're not my sheep. My sheep recognize my voice. I know them and they follow me. I give them real and eternal life. They are protected from the destroyer for good. No one can steal them from out of my hand. The Father who put them under my care is so much greater than the destroyer and thief. No one could ever get them away from him. I and the Father, one heart and mind. Now, if you were reading that scripture from a red letter edition, those would all be red because those were Jesus' words. Again, the scripture is John 10, verses 25 through 30. So, how do we do this? How do we know if we're in God's will for our life? There's only two ways. Sometimes we can be afraid to move forward in a direction because we're afraid we'll get out of God's will. But if you're earnestly seeking God, there are really only two ways to get out of God's will. One way is if He told you to do something, and you know beyond a shadow of a doubt He's told you to do it, and you won't, then that's out of His will. What do I mean by that? Well, suppose God has impressed upon your heart to go to Bible school or some other kind of school. He's made it clear to you, not once, but multiple times. Yet you don't go. Maybe you have a job or a house or a family or 100 other reasons why it doesn't make sense to uproot and go to school. You just pass it by every time the idea comes to your mind, saying, no, I can't do that. I'm not going. If God is nudging you to go somewhere, it's only for your benefit. Now, make sure it's God and not your own vain imagination. If you're resisting Him about it, you're not in His will. An instructor at a Bible school said, I was always surprised by students who came into my office and said things like, I don't care what God says. I'm not going back to my home church after I graduate. And so the teacher would say, really? If God is leading you to go back there, isn't it for your own good? Do you know more than he does? Are you planning to disobey him? Of course, they didn't like it when it was put that way, but in essence, that's what they were saying. That's one way to get out of the will of God, knowing what he wants us to do and not doing it. The other way to get out of his will is if he has told you not to do something, and you know he's told you not to do it, but you want to, or you don't heed his warning, so you do it anyway. Well, then you're out of his will. Both of these ways involve your choices, free will. If you choose to listen for his voice and follow his leading, you won't get out of his will. And if you make a mistake, he's big enough to get you back on track because you're listening to him. Join me in a word of prayer. Heavenly Father, come before you today with hearts full of gratitude and praise. Thank you for your unwavering love and the gift of your Son, Jesus Christ, came to this earth to be our shepherd. As we meditate on your word in John 10:27, we are reminded of the profound truth it holds. My sheep listen to my voice. I know them, and they follow me. Lord, today we acknowledge that we are your sheep, and we humbly submit ourselves to your loving guidance. We long to hear your voice, for it is in your voice that we find direction, comfort, and peace. In a world filled with distractions and noise, help us to tune our ears to your gentle whispers so that we may discern your will for our lives. Father, you know us intimately. You know our weaknesses, our fears, and our doubts. Yet you still love us unconditionally. Help us to remember that your knowledge of us is not a cause for shame, but an invitation to surrender. May we find solace in the fact that you are intimately acquainted with our hearts and desires. We pray that our hearts would be attuned to your voice, and that we would not be swayed by the voices of this world. Strengthen us to recognize your voice amidst the clamor and confusion. Give us discernment to distinguish your truth from the lies that seek to deceive us. As we listen to your voice, empower us to follow you wholeheartedly. May our lives be a testament to your love and grace. Help us to walk in the footsteps of Jesus, imitating his compassion, forgiveness, and selflessness. Give us the courage to stand firm in our faith, even in the face of opposition. Lord, we entrust our lives to you, knowing that you are the good shepherd who leads us to green pastures and still waters. May we find rest and security in your loving care. Guide us on the path of righteousness and lead us closer to you each day. It's in Jesus' name that we believe and pray. And everybody said amen. Amen. Well, happy Monday. Hope it's a happy Monday for you, whoever you are, wherever you are. Did you ever wonder why Of all the animals in the animal kingdom, why God chose in His Word to compare us to sheep. Well, have you ever been around sheep? They have a very foul smell. They get very dirty. And it's said by people who specialize in the animal kingdom, not me, they're the dumbest animal on the planet. Not my words, but I've read that again and again. Did you know that when a sheep falls over, the shepherd must come and pick him up? A sheep, once fallen, does not have the ability to get back up on his own feet. So, if you've ever wondered why he calls us sheep, well, there you go. I'm going to give you the numbers from around the world. But if you're tuned in via the YouTube channel, you already know what the title of today's episode is. Removing your emotions from your trading. That's a huge reason why so many would-be traders fail, is because they're unable to separate their trading activities from their emotions. So we're going to talk about that in just a minute after I give you the numbers from around the world. Starting here in the U.S. Oh, and by the way, if I sound like I got stung on the ear by a yellow jacket this morning watering the garden, I did. I think it's the first time in my life, which has been a long one, thank you, Jesus. I think that's the first time I ever got stung. Right on my ear, right where my headphone sits. Anyway, the pain's gone away. I washed it with soap and water, per the Google instructions. I did not apply meat tenderizer because we didn't have any. And then I put an ice pack on it. So I'm 90% good to go. All right. Currently, the Dow is down 52 points. The NASDAQ is up 80 points. S&P 500 is up 13 points. And the Russell 2000 is down 20 points, which for the Russell, our man in the street, that's a little over 1%. In the commodity basket, crude oil, $1.01, trading 72.75 last. That's a gain of 1.5%. Gold up $7.10, trading 19.7670 last. Silver down a nickel, trading 23.69 last. In the Asian markets at the close, the Nikkei posted a gain of 693 points. That's a little over 2%. Shanghai rose 2 points. The Hang Seng gained 158. And in the European markets at the close, FTSE down 7, the DAX down 87, the CAC down 69, which for the CAC is just shy of 1%. So we had a green day in Asia. It was a red day for the UK. But so far, it's a mixed Radio Monday here in the US of A. Of the four major indices, the S&P, the Dow, the Russell, the NQ, we really like the days when all four are red or all four are green. As futures traders, it doesn't matter if they're red or green because we can nimbly trade in either direction, long or short. It's when the four major indices are all the same color that we find some of our best high probability, low risk trade opportunities, and they have better follow through. So on days like today when the markets are mixed, that doesn't mean you can't still get your goal for the day. You certainly can. It's just not as smooth as it could be. Now, the topic of today's broadcast, before we go to the charts, now at 45 minutes into this broadcast, Michael will join us, give us a recap of the live training room. And then at the top of the hour, we'll go live on the TradingView platform and do some live trading for 30 minutes. Once we're done with that, I will complete the recap of the Logic 247 alerts and the Concierge trade alerts. So, emotions. How do we master the art of emotion-free trading? Trading in the markets can be an exhilarating and rewarding experience, but it's not without its challenges. One of the biggest hurdles that traders face is managing their emotions. Emotions like fear, greed, and excitement, and trying to prove something to somebody can cloud judgment and lead to irrational decision making, which often results in poor trading outcomes. However, by understanding the impact of emotions and implementing effective strategies, traders can remove these emotional biases and enhance their trading performance. So let's talk about a few practical ways that traders can remove emotions from their trading. Number one, you need to develop a robust trading plan. Those who become lifetime members receive something called the 24/20 blueprint. While it does a lot of things, one of the things it does is it helps you create both a business plan and a trading plan. 9 out of 10 new traders don't even realize they need such things. But to ultimately succeed as a trader, they do. That's part of the reason why 9 out of 10 traders fail. The main reason is because they don't have someone to show them how to do the job. So we take care of both of those things. A well-defined trading plan serves as a roadmap, providing clear guidelines for entering and exiting trades. By creating and adhering to a trading plan, traders can reduce the influence of impulsive decision-making driven by emotions. Trading plans should encompass specific entry and exit criteria, risk management strategies, and predefined profit targets. Following a plan eliminates the need to make on-the-spot decisions based on emotions and promotes a more disciplined and systematic approach to trading. Number two, realistic expectations. Emotions often arise from unrealistic expectations or excessive focus on short-term gains. Traders should set realistic expectations for their trades and accept that losses are an inherent part of the trading process. Understanding that not every trade will be profitable allows traders to detach emotionally from individual trades and maintain a long-term perspective. Whatever happens on the next trade you take, in the grand scheme of things, really is meaningless. Yes, it may diminish the size of your account a little bit, but instead of focusing on that, you should be focusing on the next upcoming high probability, low risk trade opportunity. Emphasizing consistency and risk management over chasing quick profits can significantly reduce emotional turbulence. Number 3, technology and automation. Advancements in technology have provided traders with access to sophisticated tools and automation systems. Utilizing trading platforms that offer features like automated order placement and risk management can help remove emotions from trading decisions. Simply put, by trading with a bracket, which means you're entering at a specific price, and once that price point is triggered, your platform automatically places your predefined target and your predefined stop loss. And at that point, hands off the mouse, okay? Because from that point forward, you have the choice. You have the ability to choose when you will enter, when you will exit, how much you will risk. But once you're in the trade, you're powerless. You have, you can sing, you can shout, you can get on your knees and wail. It's not going to change anything. Always trade bracket and a hard stop. By predefining entry and exit points through the use of a bracket, traders can minimize the impulse to make emotional, impulsive trades based on market fluctuations. Using a bracket allows for a systematic and disciplined approach, freeing traders from emotional bias. Number 4, practice mindfulness and self-awareness. Developing self-awareness is crucial for traders to recognize and control their emotions effectively. By practicing mindfulness techniques such as meditation, deep breathing, journaling, traders can cultivate a state of calmness and objectivity. Mindfulness helps traders observe their thoughts and emotions without being consumed by them, allowing for better decision making based on rational analysis rather than impulsive reactions. There's a huge difference between the two. Number 5, risk management plays a vital role in removing emotions from trading. Traders should establish predetermined risk limits and use appropriate position sizing techniques to avoid excessive exposure to any single trade. By employing stop loss orders or even trailing stops, traders can minimize the impact of emotional decisions during periods of market volatility. Effective risk management instills confidence, reduces fear, and ensures that trades are based on logical analysis rather than emotional responses. And it also removes that fear that some traders wake up with in the pit of their stomach every day. Is today the day I blow it all up? Well, if you make a habit of always using a hard stop, and once you get stopped out a couple, 3 times in a row, doesn't mean you stop for the day. It just means you hit the pause button for a minute and go look at some different time frames. Because obviously you're battling some unseen force that you're not aware of. If you think the market's going higher and it doesn't, there's typically a reason. Okay? So go take a walk. Get outside. Breathe some fresh air. Just don't get stung by a yellow jacket. And then come back and sit down and look at your charts. Again, using multiple time frames with fresh eyes that will usually take care of the problem. Traders should maintain a trading journal to record their trades, including the rationale behind each decision. By reviewing past trades, traders can identify patterns, assess the effectiveness of their strategies, and separate emotions from their analysis. Objective analysis helps traders make data-driven decisions, reducing the influence of emotions on future trades. Now, I talked about this last week, I think on the broadcast and also the workshop Thursday night. By keeping track of my trades, I was able to discern over a period of time that 75% of my stop outs happened between 9:30 a.m. Eastern and 10 a.m. Eastern. Actually, about 10:15 a.m. Eastern, because there's often high-impact economic news that comes out at 10 a.m. Eastern. So, I mean, what an incredible discovery. By simply making a conscious decision to not trade during that time period, automatically got rid of 75% of my stop outs. Now, that's a personal preference for me, and it may not play out the same for you. But the only way you'll ever know is by keeping a trading journal. And once you've compiled, a month's worth of trades, then you can go through that data and look for the patterns and find if there's any specific for you. It might be, man, it seems like 75% of my trades that I get stopped out on are the NQ, or crude, or gold, or Amazon, or Walmart, or Bitcoin, or British pound, whatever. See how powerful that is? Again, you got to show up. You got to do the work. Now, some people have a hard time taking their eyes off the screen to actually write in a journal. Well, I have good news. Windows 10 has built into it a sound recorder. You can open it and just leave it resting on your taskbar. And then when you complete a trade, you're able to click on that sound recorder, hit the record button, and what you would typically write in your journal, you could just speak it. Okay, I just took this trade at this time in this market, and here's the outcome, and this is what I was thinking. So see, you're still able to keep looking at the screen while you're talking about the last trade that you took. Okay. Then at the end of the trading day, you can put your headset back on and you can listen to everything you had to say about every trade you took. And you can transcribe that into a written journal. By putting it in a written journal, that allows you, 30 days from now to go back and see in black and white what happened, why, what you were thinking, how you were feeling, all of those things. Such a powerful tool, but yet so many traders fail to do it. In the 24/20 blueprint, it's quite clear. This is especially true for new traders. Record in your journal every trade you take, even if it's in SEM, even if you haven't got to the part of live trading yet. Even so much more important, okay? Because remember, you need to put together 10 consecutive days in a row in demo with our strategy and indicators before you even think about trading real money. Because you need to prove to yourself that you understand the strategy and indicators that you have paid for lifetime membership with, okay? Remember, the Passport. There is no recurring fees, no upsells, no nonsense. It's an all-access pass to everything we do, everything we've ever done, and whatever we do in the future, without you ever having to spend another dime on trading stuff. To get your Passport, just go here, eminifuturestrading.com. You take the free trial, which I recommend. At the end of your trial, you'll get an email with a link and everything else explaining everything the Passport includes. It's everything you see on the screen here and more, so that you can make a well-informed, intelligent decision as to whether or not you should invest in yourself, because you have what it takes to become a trader. Can't stress that enough. Bottom line here, removing emotions from trading is a challenging but necessary task for traders who are seeking consistent success in the markets. By having a trading plan, realistic expectations, using technology like the bracket, practicing mindfulness, having an aggressive risk management strategy, and analyzing trading performance objectively. That's after the fact, not in the heat of the battle, can truly help you overcome your emotions. Emotion-free trading allows for rational decision-making, increased discipline, and improved long-term profitability. Remember, success in trading lies not in eliminating emotions entirely, because, we're human, but in managing them effectively to make logical and informed trading decisions. So there you go. Follow that, and over time, you will get your emotions in check. Is it okay to be happy when you have a profitable trade? Sure, you're human. When you get stopped out, is it okay to be a little bit let down? You're human. But you got to get beyond the point where when you get stopped out, it feels like, a mule kicked you in the belly. Traders who don't understand why they got stopped out, now that's a whole different story for another day. But once you learn to read the charts and understand how price flows, then you'll always understand why you were stopped out, and you'll be able to make sure it was through no fault of your own. You truly saw the window of opportunity, but price just turned on you. That happens. There's no guru, no genie, no crystal ball, no algorithm that can predict the future. However, you can know with a high degree of probability what the next high probability move is. In our Logic 247 channel, we currently have over 14,200 individual handcrafted alerts. That's over 253 weeks, 14,200 plus individual handcrafted alerts. And over those 253 weeks, we've averaged 20% or less of the alerts being stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our Passport holders in their unlimited one-on-one mentoring sessions. Now, the Logic channel opens for business Sunday night at 6 p.m. Eastern. The market's open. It stays open for business around the clock till Friday afternoon at 5 p.m. Eastern when the global markets close. Since the markets opened last night at 6 p.m. Eastern, and this is as of 11:30 a.m. this morning, we issued a total of 22 alerts, 3 never triggered, still waiting on 8. That gave us 11 actionable alerts, of which 2, or 18%, would have been stopped out based on that risk profile I just explained. Now, even though the Logic alerts are based on current price action, some crazy pop-up there. Anyway, Logic alerts are based on current price action, but there's time built into the alert for you to get the alert, study the 30-minute chart, see the window of opportunity that the alert represents, so that when price reaches the entry point, you're prepared to take action with your smaller time frame range chart. More times you repeat that process, pretty soon you'll be seeing those windows of opportunity on the 30-minute chart before I even have an opportunity to post them as an alert. And that's our goal for you, to become self-sufficient. As a lifetime member, you'll always have access to the weekly trading zones. But beyond that, we want you to get to the point where you can simply look at a chart, no input from anyone else, and see the high probability, low risk trade opportunity with your own eyes. Hopefully that's your goal as well. Now, along with the Logic alerts, we still have our original alert service, concierge trade alerts. And they're different in a couple of different ways. Number one, they're based on historic price action. And they don't come out around the clock. When the report is published, last night it was 6:35 p.m. Eastern. First thing you do is go to the 30-minute chart of whatever market you trade. Use the ES as an example. If you're not a member or a free trial member, you didn't have these numbers last night at 6:35 p.m. Eastern. So if you want to grab a screenshot, you can, because we're going to walk through each and every one of these markets before this broadcast is over. So what do you do with the numbers once the report is published? Now, the CTAs and the Logic alerts, it's not an either-or proposition. The two work hand in hand, okay? First thing you do is make note of where price is on your 30-minute chart at this time. It's always going to be between these two numbers. Then draw a line in the sand here and a line in the sand here. They serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's trying to reach the short target. It's that simple. You still have to look left to spot potential obstacles, previous swing highs or swing lows that could become concurrent support or resistance. And over time, you'll learn how price behaves at a weekly trading zone. The zones are published every Monday morning at 6:15 a.m. Eastern. We've published the zones since December 14th, 2009. Once the zones are published Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Now, I know it seems real simple, and it is, if you can resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So, Michael, are you here yet? Michael's not here, man. Okay. So, till he gets here, we'll jump to our daily chart, which those of you that were tuned in on Friday will recall that we have taken out that February 2nd high that was in place for a very long time. Now, how my regular fibs got, oh, there they are. There they are. It's February 2nd high. We were in a downtrend over a year. The low was put in October 13th. And that October 13th low led to the February 2nd high. And we had several attempts to break out and take out that February 2nd high. Got real close here and real close here and real close here. But then on Friday, it happened. And so we then drew fib extensions. Okay, that's this tool right here. Connected this swing low to this swing high to this retracement low, and the same 13th century math that allows you to draw fib retracements also allows you to project into the future where the market is likely to find resistance. So the 38% fib extension is at 43.21. 50% fib extension, 43.68. 62% fib extension, 44.16. And 100% extension put the market at 45.70. So what does that mean, 100% extension? It means the number of points from here to here would take us to here. So we've already traded through the 24% fib. Now we're headed for the 38. If we can get through the 38, then the 50, then the 62, and then the 100. Okay? And we're at the top of the session. 43.04 and a quarter. Price is trying to get to this area, but before it can get there, there is a weekly trading zone in between. Now, I believe, yeah, there is at 43.10. Now, Michael's here, so he's going to take over and do a recap of the live training room. And then we'll trade for 30 minutes live on TradingView. And then I'll come back and finish the recap of the CTA alerts. We'll walk through each and every market one by one. Michael, looks good.
All right. Here we go then. Good afternoon, everyone. Happy Monday. Today is the 5th day of June, 2023. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30. Click on that. Now, if you're going to take the free trial, you should definitely go here, click on trading platforms, and give us all the information we need to get your desktop looking like mine. Okay? If you have any trouble with that at all, get a hold of us. You can email us, you can call us. Somehow get a hold of us and let us know. All right, it should not take you more than 5 minutes to set up that platform. Do not let the platform be a stumbling block to you. We'll get it set up for you. All right, don't want that to be the thing that slows you down, makes you think twice. These are the rules for the trade setups. I'll go over these once I get into the live training starting at 1 o'clock. All right, but these are the rules that we follow for every trade, so you should probably review those as well. Yes, I'm going to take the free trial. Now, this is the spreadsheet for today. It was not a banner day today. I mean, we did get the goal for the day right at the last minute, the very last trade. I missed a bunch of trades, and I could have gotten the goal earlier, but I didn't. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down the bottom. Today's the 5th day of June, 2023. Today I made 68 ticks in the NQ, 2 in the Russell, and we lost 20 on the ES. We had 2 stop outs on the ES. That put us at a whopping $100 a contract goal for the day. Today took 105 minutes. That means it was 11:15 when I got the goal for the day. And I think I counted that right. Yeah, 90. Yeah, and 20 trades. Now that is unheard of for me. Usually 20 trades to get the goal for the day. And at that point, we're up $600. That's not $600 a contract. That's $600 total. And it took, well, we took a total of 20 trades this morning, so I got the goal on the very last trade. There was a trade before that I said, you know, I could have the goal right now. I'm going to kick myself for not taking it. But I let it run a little bit and ended up being a break-even trade. Anyway, on the month now, we're at $942. Now, that's gross. That is not the net, all right? The net with an $8 commission on the month so far is $398. With a $5 commission is $602. See the difference a commission makes in there? $3 difference in commission. Big difference overall. And down here on that puts us that's over 3 trading days, so we're averaging $314 a day on the month with 1 contract, and on the year we're at $50,749 and we're averaging $478 per day per 2-hour trading day with 1 contract on the year. All right, this is over 106 days. If you were to quit trading when you get your goal for the day so far this year, you would have worked 33 hours and you would have averaged $1,419 an hour for each of those 33 hours. Not bad. All right, let's get into the trades. The gold, we did not have much at all. This should not take long. In the gold, we had 1 trade right here. It was a break-even trade right here. I got in on the pullback. That's why it's not a stop out. I got in on the pullback and it was a break-even trade. There were some nice trades on gold, but none that I actually took. Okay, starting out here. This was news came out right in here. That's why we had this gap right here. That's why I was thinking it was going to get back down to this level. It still hasn't done that. But the gold, after it ran on the news, it flattened out, made a move down, and flattened out again. And it's still pretty flat. So I don't know. When I start doing this live training here in a few minutes, when I start doing the live stream, I don't know what's going to happen as far as trades go. So I hope people show up and ask for stuff other than futures. This is the Russell. So go back to the beginning on the Russell. You see there was a lot of new trade zones in there on the Russell. Back to the very beginning. And our very first trade on the Russell was right here. This is our first trade of the day on the Russell. We stopped out. And I should have actually had my stop break even on that. So that was a mistake to start off the day. We were minus 10 ticks. And then I didn't grab this one, which would have been a good valid green arrow. I didn't grab that one, which would have been another good valid green arrow. I took a break even trade on this one. And then on this one here, I got 1 tick to get me to minus 9. And I missed all of these. There was an arrow, ribbon trade there and an arrow trade there that I missed. Some very nice trades through here. I got this one. I went from 9 to 8. So it's still at minus 8 there. Then on this one, I got 10. That put me at plus 2. Then you see there's a whole bunch of no trade zones. A couple of trades in here. I went from plus 2. There's a stop out in here that I'm missing, I think. Yeah, there's a stop out in here that I'm missing somewhere. I went from plus 2 back down to minus 8. So I stopped out. It might have been right in here, something like that. But I did stop out. And I went back down to minus 8. Then here I went to minus 4. So I got 4 ticks profit there. And here I went to plus 2. So I got 6 ticks profit there. This was right at the end. This was my last trade of the morning right there, where I got the goal for the day. Since then, not a lot of trading. Okay, the markets just were not extremely conducive to trading today. And that was the Russell. Now we get to the ES. You see my 2 stop outs right there in the ES. That was pretty much all we had. We had a break even then we stopped out there, and then we stopped out again there. So it was a minus 20. I had one more break even right here that went on to do what it should, and I had another break even here that went on to do almost what it should. Well, neither one of them actually put in a lower swing after the trade, but they did both go pretty good in their direction, the direction of the trade. But so I ended up with minus 20 on the ES. Right in here, guys, this right here was a ribbon trade. Okay, this was a valid ribbon trade. You didn't need an arrow for that one. You weren't going to get one because it's not coming out of the oversold. This didn't hit the ribbon. That's why that arrow is not green. Through here, there were a couple. Once we hit the higher swing in here, it pulled down and hit the ribbon. There was no arrow here because we didn't come off the bottom. But right here, there should have been an arrow right here. I'm not sure why there wasn't. But there should have been an arrow right in there. And it did put in a higher swing, then it pulled back down and it gave you nothing else. So this was the last viable trade right here. It was actually this one right here off the ribbon. And that was it on the ES. Now the NQ, we had a couple of trades on the NQ. It was bouncing around quite a bit today too. And you know, the guys that got in early got their goal for the day and quit. The guys that are following the plan. And I know there were some guys that did get in there and they did get their goal for the day and they did quit. All right, let me see in here. All right, scrolling all the way back here now, even further back, Okay, I'm looking for the first trade on the NQ. It looks like I missed all this stuff here that happened in the first 15 minutes or so. Then right here, news came out. All right, I ended up getting break even on that. Then the next trade on the NQ, I picked up 30 ticks on this one, 1 tick on that one. So I was at 31 at that point on the NQ, and I had a break even here. And the next trade was right in here. I ended up getting 4 ticks on that to get me to 35. That was a nice trade right there. I only ended up with 4 ticks on it somehow. To get me to 35, and then I didn't do any more trading in here until all the way over here, and I went from 35 to 47, so I had 12 ticks on that. And the next trade I went from 47 to 56, so I had 9 ticks on that. And next trade, I went from 56 to 68, so somewhere in here I had another 8-tick trade. It might have been right in here. I had another 8-tick trade somewhere that I didn't mark. I mean, there was 68 on the NQ. Okay, now it is 1 p.m. and I do not have that stream ready. Well, here it is, down here. If you want to get into the live stream that I am going to create right now, just go here to TradingView.com, and up in the top, go to community and then live streams, and click on that, and you'll be able to get into this live stream that I'm going to do right now. Now, for everybody that's in this room, I'm going to finish this up right here by saying, oops, that is the wrong link. That is the wrong link. We wanted this link right here. Okay, I cannot get to the live stream. This is giving me the wrong link right here. So, Dwayne, do you happen to have that link for the live stream? Because I do not. I can't get to it right now. I'm guessing that you do not. All right, well, I might not do the live stream today because this is messed up. This is not me. That's not me. Oh, here it is over here. Okay, that's me. This is the link, so I can do it. All right, so let me go back over here and do that in here. Paste. Okay, so now I can jump into the live stream. Sorry about that, guys. Okay, so what we're gonna do now is jump into the live stream. And to get into the live stream, you need to go to TradingView.com, then community and live streams. Okay, that live stream is coming live now. Let me shut this off and start the live stream. All right, so if you have not taken a free trial with us and you want to take a free trial, then go here to mytradingiq.com, sign up for the free trial. This is how we ended the day. Today we're up just $100. I hope to double that right now during this live stream. And this is where we are right now in the live stream. Okay, so let me slide this all the way back here. We ended the morning session with +2 on the Russell, +68 on the NQ, break even on gold, and -20 on the ES. Right, and now we're going to start this live stream again, and we'll see how it goes. Hopefully, we'll be able to double what we did this week here right now. Okay, position this so everybody can see it. There we go. All right. So right now we just put in a higher swing here on the ES. We did that to pull back down. We got a higher swing here on the NQ. It gave us this arrow right here. Now, if you're going to wait for the green arrows, which are the high probability trades, the green arrows like this one over here, this is going to pull back and hit the ribbon and bounce up off the ribbon for that to happen. Okay, we're in the oversold here, so it could still happen, but it hasn't happened yet. Right now, that's all we're waiting for. Okay, so hopefully we'll get that. I was hoping when the European markets closed today at 11:30 that we're going to get a lot more action, and well, we didn't get a lot more action. We did get some more action, but not a lot. Look at all this flatness here on the NQ. We had this one leg right here, and then it just got totally flat again, and it started another leg right now, and now we're at a position where we could possibly get the green arrow on an up close on this bar right here. If it comes out of the oversold, be 85.75 with 89.75, so it'd be trying to get my DOM up here. 89.75 be 90 right now is what you'd be buying. Crap, and that's set to the wrong number of contracts. I cancel. Okay, so this right here is what you would be doing. Right, the low of this bar is it. Well, now the low of this bar is right here at 85.75. So the high of the bar is going to be right here at 89.75. So if it closes up, we are one tick above the close. So if it closes up, it's going to take us in with it. Okay, that is what I'm looking for right now. Now, if you're in the live stream, if you're in the live stream and you have any questions about anything, you can just type them into the live stream. This is not going to end up being a trade right now, at least not at that point. 82.25 up to 86.25. So be looking at 86.50 as a possible entry point now. Okay. Now, for this to happen, this has to stay. The black line has to stay out of the red. We got to get the up close, and down here in the slingshot, this black line in the slingshot needs to pop out. There it is right there. Okay, and it just popped me in. Now my stop is automatic here at -20 ticks because this is a 16 tick range. My stop is automatically at -20 ticks. This is set to automatically bump my stop to break even after I get 8 ticks in profit. Okay, it hasn't done that yet, clearly. Once I get 8 ticks in profit, it'll automatically bump my stop to break even, actually plus a tick. I do that in case there's slippage. And it's got a 30 tick target on it right up here, right near the high of the day. It takes us right now. Oh, that is so aggravating. Okay, let me go back in here and find my DOM again in the middle of this trade. It's right here. Okay. I'm glad my trading is not on a platform that gets kicked off constantly like that. All right. There, okay, just hit 8 ticks in profit and it bumped my stop to break even. Now, it did not look like it hit 8 ticks, but it just took me out of break even. Okay, so now what we anticipate, guys, it took me out of break even, but what we anticipate is that it's going to get up to this level right here at 94.75. Okay, that's what we anticipate on this. Let me see, let me close that window there. Okay, that is one less. Let me just put this break even marker on here. Yellow is break even, blue is profitable, yellow is break even, and red is a stop. All right, so the NQ one didn't work out for any profit, but right now we'll look at the ES right here. We have a higher swing on the ES, and we're looking for it to pull back down and test the ribbon. Now, anybody that's in here right now in the live stream, there's a group of people in there in the live stream. That is how you take the free trial. If you like what you see, you can sign up there for the free trial. Now we anticipate over here the NQ that it's going to get up to that level right there. Okay, it took me out of break even, but that's what we're anticipating. We are not going to have a trade here on the ES. And right now, the Russell, the long-term direction of these outer bands right here, on the Russell, the long-term direction is completely flat. So we're not going to have anything right there. And on gold, it's even flatter than the Russell. So we're really not going to have anything there. On the NQ, we had this one trade so far. That was our only trade. It pulled back pretty deep, almost hit our stop. And now it's just running up to where we want it to go. We want to exceed this level, but that's what it was looking like it was going to go up to. For anybody who is in the live stream right now, if you have not already started following us, you can start following us. Just, I don't know how you do it, but somehow there's a follow button somewhere. You can start following us if you haven't followed us yet. If you like what you see, we do this in the morning from 9:30 to 11:30. You can take a trial free of charge. If you like the indicators, you can also take a trial of them free of charge, but you can only take the trial of the indicators. You can only access the indicators through taking our trial. All right, we'll give you access as soon as you sign up for the trial. We'll give you access to the indicators. It would be best for you if you actually showed up for the trial, not just sign up for the trial to get the indicators. Now, this one, 70, 166, 115, 40. Yeah. That one is not me. All right. We almost have a higher swing right here, but not quite. Okay, almost, but not quite. Okay, that was not me again. And that time it gave me a warning to change my password, which I might just do. Not tell anybody about. And somebody just did. Isn't that nice? Right in the middle of a live stream. Okay, well, let me show you something else then. If you have not taken a free trial with us, hey Shane, if you have not taken a free trial with us, you can go here to mytradingiq.com, sign up for the free trial right here. Now, I don't know what just happened with our TradingView, but it just crapped out. So I may have to quit this stream early, which kind of sucks. Yeah, let me see if I can deal with this on another monitor. Somebody in their infinite wisdom decided to come in and change our password right in the middle of everything. And that is a bad thing for everybody that knows the password. All right, so here is lining up. Hit sign in over here, sign in there. Not a robot. Sign in. Invalid password. Yep, somebody changed the password. All right. Why was ES not a trade? I can't even tell you right now, Shane, because I can't see my charts. Somebody just went in and changed my password on me. So that is a thing we'll have to get in touch with TradingView about. It did not touch the ribbon. Well, you know, I can't look at it. I can't look at it in TradingView because somehow my password just got changed, but I can look at it over here. Okay, so it did touch the ribbon right here. It did touch the ribbon down here. All right, the ribbon is in the same place, right? Price is in the same place and the ribbon is in the same place. The slingshot is different, but this green line is pretty close to what the lead line is in the other slingshot. Right here, it wouldn't give you an arrow because this didn't come out of the overbought, I mean oversold, right? And this didn't come out of the oversold. In here, you would have gotten an arrow right here and right here, right? With the black line being on the bottom in the ribbon. I don't really have the background color in here, so I can't, you know, I can't put the background color in this platform, and I can't sign back into TradingView. So I'm not even sure if anything I'm doing right now is actually being done in TradingView. Yeah, so right here, you would have had a trade right here, and it didn't put in a higher swing until over here. So this would have been the trade right here, Shane. I'm sorry, Nightmare. GPU. It would have been a Shane. I mean, this would have been a trade right in here, but it would not have given you an arrow because you were not coming out of the oversold. So if you were coming out of the oversold, like right now, this would give you a green arrow as long as the black line is not in a red coming out of the oversold down here. Now this isn't exactly the same as the lead line on TradingView. But if this comes out of the oversold, which it's going to do, you can see how it's bumping up right here. So it's going to come out of the oversold on an up close. You see. Yeah, Dwayne, you have any idea what the new password is? Because it just changed and I can't get back in. So right here, we'd be looking for an up close. Okay. And that would give you a green arrow. See how this is? You can do this one intra-bar right here. You see that? Nightmare. So you know it's gonna be what you're looking for on the up close. So right now on this bar on TradingView, we've got a low here. This is the ES. You've got a low here of 3207. 40.3207. Look, I can actually place this trade in here because, well, this is the platform I'm placing trades on anyway. So you've got a low here of 40.32. Let me hit this. You've got a low right here of 43.02. 43.02 is what I mean. So we'll buy right there at 43.04. Okay, if we get an up close on this with TradingView, you would get a green arrow with an up close on this as long as it comes out of the oversold, and it is doing that. That would give you a green arrow right there. Now, I don't know what the password is to get back in to the TradingView right now. Yeah, okay. Well, I can try that on this other monitor because I can't pause this thing, this live stream. So I'll go over here and try that. Over here, let me see. And I cancel there, and that looks like it might get me in over here. This is a new password. And then we'll see. Okay, well, I can't do it anymore on this one, so I'm just gonna end this thing. Yeah, I'll try it again on the other monitor. I think I got it going on the other monitor. But this trade didn't end up working out that we were looking at right there. It's gonna go. This trade right here didn't end up working out that we were looking at. Okay, so other monitor. Do that. And now I can't see. This is just. Let me see if I can fix this some other way. Hang on. Normally I'd be able to pause this so you guys didn't have to watch me fumble around like this, but fumbling is what I must do. Hang on. I should be able to bring this back up over here and show it to you clearly over here. You see we didn't end up with that up close here. Nightmare right here. We didn't end up with the up close, so it didn't end up being a trade. Down here would have been a trade. This does finally load up here. Here it comes, loading up, and okay, so I think I am loaded back up the right way. Okay, except, yep, it's working. Okay, so what we were looking at right here, now this was Nightmare. This over here was, that's okay. We'll work through it. This over here was what I was talking about. This was going to give you an arrow over here. This one, if it would have given us the up close and commodity oversold, then you would have had an arrow there. Now, one of the things you may have noticed just there is the advantage you have by having DT Pro with this green line here on DT Pro and the line right here on TradingView. You see, you know ahead of time. Pretty close. It's not exactly the same, but it's pretty close to what the black line is going to be doing here. You can't see that, can you? No, you can't. Here, let me slide that over so you can see it a little better. There you go. That's what I was trying to show you. That was something that I was working on for you guys, for all of our existing parts. See, this right here is what you're looking at right here, but this is in real time, tick by tick update. This one here doesn't update until the bar closes, so you can see ahead of time what's going to happen. It's not exactly the same. It's not exactly the same, but it's pretty close. All right. So all that said, the Russell here is pulling back up to test the ribbon, and we might get a trade there on the Russell. Okay. I kind of want to watch this thing close. This other one right here. But let's look at the Russell. Okay. Sorry about that. This is kind of stuff you run into sometimes. Streaming in 3 different places at once. Okay, so I hear 18.3. That down close right there on the Russell is a short. Okay, and I'm trying to get filled, and I didn't get filled yet. I'm trying to get filled, and if we get filled, that would be great. So we didn't get filled, okay. And I'm going to stop looking at. Okay, now we just got filled on the Russell. Okay, so we're short the Russell. I'm going to slide this off to the side for a minute. And slide this back into view. You all can see it. Now, every trade starts out with 10 ticks of risk. Okay, every trade on a 7-tick range bar starts out with 10 ticks of risk. Right? All of that stuff is defined for you at mytradingiq.com. And hold on, when that comes up, I will show you. I just stopped out on that Russell. I'll show you that again in a second too. Okay, here. Here's a Russell. I had a 10-tick stop on the Russell. It just stopped me out. I didn't have the greatest of entries on that, but it just stopped me out. Over here on the NQ right now, we're starting to pull back a little bit. When that gets up into the ribbon, we're going to look for it to close down out of the ribbon. We want to see that get up into the ribbon because we are doing a direction change right here. See, let me slide this over so you guys can see the whole thing. There we go. All right, a direction change occurs when the long direction up here, these outer bands, they change from bullish to bearish. So right now, if we get a down close, here's 77.75, there's a down close. Now, that on the NQ is, I don't have the NQ. I don't have the NQ down in the right place. Hold on, let me find my NQ down. I move stuff all around. All right, well, the good news is you can still get in the trade because it hasn't gone 8 ticks into profit, I don't think. All right. 73.50 down to 72. No, it's not gone 8 ticks into profit, so you can still get in the trade. Okay, so I'm jumping in right here. I'm in the trade. I have a 20-tick stop on the trade, and this is all automated now. It's going to bump my stop to break even after I get 8 ticks in profit, assuming I do get 8 ticks in profit. It's going to bump my stop to break even. It also has a 30-tick target on it. Okay, so I'll leave this here for you to watch. And I will try to organize this other thing. Does anybody that's watching the live stream, do you guys have any questions? I know this live stream is 121. This live stream has been a little combobulated today because the password changed in the middle of everything. And it kicked me out. It's one thing if it's just a password change, but it kicked me out. It didn't kick me out of the live stream though, oddly. I stayed in the live stream. I just lost my charts. But anyway, what we're looking for over here, guys, it's all the same stuff, even when I don't know the password. It's still all the same stuff. We got the green arrow. Now the green arrow is your highest probability trade. All right. and it just bumped our stop to break even, and we're looking for it to get all the way down here to plus 30 ticks. I'm going to lock in 4 ticks on this. We have 1 point pays for the trade, and this is plus 30. It should actually get all the way down here to 65.75. 65.75 should get right down here. Right? This is 30 ticks, so I'm happy with 30 on any trade. So I'm not going to be greedy about this. I'll just take 30 if you can give it to me. But I have 4 locked in. Again, what you anticipate is that this is going to work its way all the way down here into the oversold and then come back up. All right. And so now I'm just going to lock in another 4. So we have 8 ticks locked in on this at this juncture. Okay. And looks like we're going to get out with 8. All right. So, oh, sorry. I keep wanting to put that so that it's right on my screen, but then I see that you guys can't see the whole thing. Okay. So we picked up 8 ticks there on the NQ. It's now 123, guys. I don't know where else we're going to get trades. Right here, it's not a valid trade off the ribbon right here on the ES because the long-term direction is flat. We did stop out on this one. I didn't put that stop out in. So let me correct this. All right. Did a stop out right there. Before I switch that one, let me go over here and just put blue arrow here, and this is going to be a red arrow. So far today we've had a few trades. And break even, profit, and stop so far. But given the way the morning has been, I'll take that. On this one here, we want to see it put it in a lower swing before we go again. If you are new to trading, or if you're new to us, the markets are always doing the same things. They're going up and down like this, and they're trying to get some area of resistance from some area of support. And what we want to do is take the pieces in the middle. All right, get in there, get out there, get in here, get out there, get in there, get out there, and then be done. We don't want to trade all day long. We just want to get in there, take our money, and be done with it. You can trade these bigger moves if you want to, and we have something for that too. That's what Dwayne was talking about before I came on. Dwayne was talking about the bigger move stuff, the Logic 247, the concierge trade alerts. So that right there is something that you can do if you want to, but this is what we do. All right, we take the pieces out of the middle so that you don't have, for a big move like this on a larger time frame, you're gonna have to wait 2 hours, 3 hours, something like that for the whole thing to come together. If you'd have enough bars to trigger a setup, it'll take hours for that to come together on a larger time frame. While on a smaller time frame, you can take all these pieces out of the middle of it while it's setting up. It depends who you are as a trader. This is the way I do it, but that's not the only way that it can be done. Right now, let me slide this over so I can see what gold's doing. Okay, gold's still doing absolutely nothing. So if we're going to have a few minutes here where we're not going to have to look at gold, then that was a pretty good time. It's 125. So right now we're looking for this drop all the way down through here right now. Right, we want to give us a lower swing and then we'll have some more trades. Over here, we need the same thing. We need to give us a lower swing and then have more trades. Remember, the market should be going like this. It's down, then up, then down. Right, so this is the point right here where we got in and we took some profit right there. And we anticipate it's going to exceed this swing low, continue the trend, and keep going down. All right, that's the same thing over here with the gold. It went down. Now it's pulled back really deep. That's, I'm not the gold, but the Russell. This pulled back really deep, and that's the problem with that one right now, is the deep pullback. Let's just look at that in a little more detail. Okay, let me get rid of those drawings. Okay, so you see this was the leg down, this was the pullback, this was the leg down. This pullback is a little deeper than this pullback. What we need to see now on the Russell to continue the trend is a push down below this level. Right, a push down below here right now. We had this move, this pullback, this move had a little jig inside it, and this pullback. Right, and now to continue the trend, it's got to exceed this. It's got to go down and exceed this. But this one went down and had a little move back up in it, like this one is right now. This could be the little move back up, just like this one was within the trend, the push down. Okay, and we won't know, and we're not going to take another trade until it exceeds this low right here. Right, that's what we're waiting for. Okay, let me go back over here for a second. I can't see what's going on in there. Okay, what range do I have on the NQ? The NQ is on a 16 tick range. Okay, that was the Russell on a 7 range. The NQ is on a 16 range. See right there, 16 range. Okay, so the NQ is now putting in the lower swing that we were looking for. It's continuing to move down. The Russell is almost there. The ES has got to follow up all the other indices right now. Again, if you guys are in here for the first time and you like what you see, you can take a free trial. Go to mytradingiq.com and sign up for the free trial. It is right here. So you sign up for the free trial, mytradingiq.com. These are the rules for the trade setups right here. All right, there are 3 parts to every trade: the entry, the risk management, and the exit. These are the rules for the entry. Those are the only rules that I use to enter on TradingView. These are the rules for the risk management. Those are the only rules I use for risk management on all platforms. And these are the rules for the exit. And those are the only rules I use for the exit on all platforms. Okay. All that stuff is at mytradingiq.com. Stick it all right out there for you. So we got the lower move here. Remember a minute ago I said on the Russell what we were looking for. We want to get down below this level, which we just did. It's a longer move than this one, which is good. So now we're going to look at pullback on this. Pullback to get up into the ribbon is going to be pretty deep, right? It's going to go all the way back up. I'm going to shrink this up a little bit and slide it over a little bit more so I can get to the drawing things over there. Yeah, this is what I want to get to right here. All right. So this is our leg length down. Okay. And this is roughly our leg length back up. Okay. So we want this leg length to be shorter than this leg length. We want this leg length, once it gets up there, to be at least that long. Okay, leg lengths are in Wednesday's lesson, I think. In our lesson plan, we have a lesson plan that we go through every day in our room. Leg lengths is part of Wednesday's lesson. So right now on the Russell, we're not going to have a trade here because it hasn't hit the ribbon because it's not overbought. But if we jump over here to the NQ, we did just get a trade there on the NQ. Now that is something that it hasn't pulled back. If you're waiting for the green arrows, guys, if you're waiting for the green arrows, it's got to pull back and get into the ribbon to give you a green arrow. It's got to go the ribbon and the overbought at the same time. Okay, the green arrows are the highest probability trades. You see this one up here? Highest probability trades are the green arrows. If you're waiting for the green arrows, then you have to wait for that. If you took this on the black arrow, which is something you can certainly do, then your stop should have just bumped to break even. And I'm going to lock in 4, and another 4, and I'm out with 8. I was going to drop it at 12, but I didn't. But what it should do is get down below this level. And remember this, the leg lengths that I was just going over here on the Russell. So I wanted this pullback to be shorter than this pullback length right here. Okay, so it was shorter, and that's good. And I want the push down to be bigger than this push down. So if I readjust that, we'll come here and look at the Russell one more time. The NQ is putting in lower swing, so the Russell should probably too. And this is where it should go down to, according to the leg length theory. All right, and that is taught on day 3, I think, of the lesson plan. That's day 2, day 3, lesson plan, leg lengths. So if you've not taken a free trial with us and you want to take a free trial with us, then go again here to mytradingiq.com, sign up for it right here. Okay, if you're in here and you're not following us yet and you want to know when we do live streams like this, or when we do upgrades, or we do anything like that, start to follow us on TradingView, okay? And you'll get notified whenever I do something, whenever we, as a team, come together and do something, right? I've gone past my time here, but I did spend 5 minutes that I was doing other stuff. So we'll give this a few more minutes. Now right here, you see it's doing the same kind of thing that it did here. Remember, it went down, pulled back, went down, pulled back, went down, pulled back, went down, pull back down. This is a pullback. So now I'd be looking for a big push down to this level coming up here. That's what I'd be looking for. Okay, if it's going to repeat the way that it's just acted twice, then that's what I'd be looking for right now. Okay, so let's get in here. Yes. All right. So that's all good stuff. Did put in what it take, how to get the free trial, how to sign up for the free trial. This is just the Russell. Let's go back and take a peek at the NQ here. Right, the NQ after pushing down right here, we got 8 more ticks there. It's doing it again, but this time the green got into the black, so you're not going to have a trade right here. Okay. That disqualifies all short trades when that green gets into the black like that. Okay, so this was another profitable trade. Oops. Give me that. Come on. There. Leave that blue. Okay, and here on the Russell, it's got to push down to give us a trade setup. It's not going to give us anything here on the ES either. And because the black got into the green right there, you're not going to get a trade here on the NQ. And gold has just been flat the whole time. All right. Well, guys, I've overrun my time just a little bit here, but I will slide this over a little bit right there. We'll slide that over a little bit right there. Slide that over a little bit right there. All right. I'm going to wrap it up in here for now. I do have some other meetings I have to get to. So if you have not taken a free trial with us and you like what you see, we do this every day from 9:30 to 11:30 in the morning. Right? Every single day, 9:30 to 11:30 in the morning on every single business day. Anyway. Go to mytradingIQ.com, sign up for the free trial right there. Really is free. No credit card required. All right. So with that, I'm going to wrap up the live stream. Okay. Live stream is wrapped. Now we can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Wayne, if you are ready.
Yes, sir. I'm ready.
Okay.
I know it was a rough morning, but it's a recap of the recap.
Hang on, let me go find that screen. I think it was 105 minutes, 20 trades, $100 a contract. So I know we are going to have people out there that say, oh, well, you know, if you account for the commissions, that is absolutely true. If you account for the commissions, that was not a very profitable day today. That does not happen very often.
But that is the truth about trading.
It is. And if you find yourself in a position where that is what every day is like, where you're not getting your goal in a small amount of trades, I'm just checking to make sure that those were the right numbers. It was 105 minutes, 20 trades, $100 a contract. Now with 6 contracts on it, was $600 a contract. But if you find yourself in the position where it's taking you 20 trades every day to get to your goal, well, then you're probably doing something wrong. Okay. I mean, today I took one trade that was wrong. My very first trade, I made a mistake on that one. I was minus 10 ticks. And that was really the difference between getting the goal much sooner and not. But then I missed a whole bunch of trades while I was talking too. So, I mean, that was my issue today. But if you're taking 20 trades to get your goal every day, then we need to sit down, right? Because it shouldn't be that complicated. But it is the truth about trading. Some days it will be. All right. Sorry, Dwayne. I was going on.
That's all right. Okay, good job.
Okay.
Good job. The great lesson today, guys, is you got to hang in there. You know,
Yes.
I talked about it earlier. You know, you have a couple stop outs in a row, take a break. You know, go walk the dog or walk yourself or, you know, do something. Get mindful and come back and look at your charts, your multiple time frames with a fresh set of eyes and connect with the rhythm of the market, whatever the rhythm is on any given day. And
that's right. Get right back on that.
If you've ever been out on the dance floor, you know what it's like to get out of step with the music Doesn't mean you run to the bathroom and cry. You just pause, listen. Okay, I got the beat now. And boom, you're John Travolta. So there you go.
There you go. There you go.
Trading and dancing lessons all in one broadcast. Okay. All right, guys, we're back to the daily chart here, the S&P 500. And we drew those fib extensions. Either on the show Friday or Thursday night. I think it might have been on the broadcast Friday. The good news is, if it was on the broadcast Friday, you can go to youtube.com/CFRN and not only see Friday's broadcast, but last Thursday's broadcast. You can see the last 2,200 plus daily broadcasts. Scroll back, check them out. So we know where resistance is right now overhead at the high of the session. Where's support? At the low of the session. Below that, the 24% fib extension. And the high of February 2nd. Now, I said if we broke through the high of February 2nd, that I would have to adjust these fibs. Now, I'm not going to adjust the October 13th low because that hasn't changed. What has changed is this part. So, getting it spot on. Let's see, 43.05.75. I got 43.05.5. It's good enough for me. Okay. So we have resistance at the high of the day, 43.05.75. Support at the low of the day, 42.80.50. And then the 24% fib extension, 42.62. And then we get down to the step line. Potential support, blue and climbing. Potential support, daily BBC. Absolutely potential support. As you can see, the pullback to the BBC holds more often than it doesn't. Okay. And when it pulls from the other side, from below, it holds more often than it doesn't. Now, you might say, well, I don't trade the S&P or I don't trade the daily chart. Well, I trade the S&P and I don't trade the daily chart. However, I go to the daily chart at the beginning of any trading session for 2 minutes, just long enough to identify what the institutional traders are doing. As you recall, earlier at the beginning of the broadcast, we had a green candle all the way up to the top. We're at the high of the session. Apparently, institutional traders got a little nervous at that level or just decided to take profit. Okay. What you glean by visiting the daily chart of whatever market you trade, whatever futures market, whatever stock, whatever crypto, whatever forex pair, whatever ETF, is you're looking at what the institutional traders are looking at, because their accounts are denominated in hundreds of millions and billions of dollars. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Okay? So, by looking at this, we can see right now, whereas it was extremely bullish earlier on when we were at the high of the session, now there's indecision. That doji represents indecision. So how we close today will be very important. Do we close at the high of the session, low of the session? We know we've got all these layers of support waiting down here. Okay. So that said, we'll jump on off to the 30-minute chart. Now, earlier, I gave everyone who's not a member or a trial member an opportunity to take a screenshot. Sunday, last night, 6:35 p.m. Eastern, all of our members, all of our trial members had these targets. However, this broadcast is open to the public, so unless you're a member or trial member, You didn't have those targets last night. So as I walk through the markets, I want you to think about how sweet life would be if you had the targets last night at 6:35 p.m. Eastern. So here we go. This is the opening candle. It would have been in 5 minutes into the life of this 30-minute candle that report came out. Price dropped to the BBC. The pullback holds more often than it doesn't. Red and falling. BBC just stands for bull, bear, cross. When price crosses above it, we're bullish. We anticipate higher prices. When price is below it, we're bearish. We anticipate lower prices. I mentioned that in the Logic 247 channel, there's over 14,200 individual handcrafted alerts right now. Every one of them is a trend trade. In other words, when the alert was issued, if price was below the 30-minute BBC, then it was a short alert. If price was above the 30-minute BBC, it was a long alert. Okay? That's called trading with the trend. There's nothing wrong with counter trend trading. I simply suggest that new traders learn to trade with the trend before you start trading against the trend. Trading with the trend just gives you a higher probability, low risk trade opportunity. So you would have done absolutely nothing last night. You'd have watched price pull back, expecting it to hold. But you also know that red and falling represents potential resistance, and it was. So price finally got above red and falling, but it took a little while for red and falling to turn to blue and climbing. Once that happened, this candle opened at 42.86, and it opened at 42.86 and a quarter. And it ran up to 42.87 and a quarter. And then the next candle continued rising all the way up to 42.90. So from 86 and a quarter to 42.92, well, that's 6 points. If it goes 2 points a day, well, you certainly had an opportunity there. And then price consolidated right here along blue and climbing and the step line, but we're still above the BBC, so we're only thinking about long trades. And we eventually hit the target and pull back to the BBC. Okay, this is the 9:30 opening candle. This is the 10 a.m. candle, which I assume there was some high impact news that came out. And pullback held. Pulls more often than not. You've got blue and climbing. So as soon as this candle started printing green, even if you waited for price to get above the BBC at say 42.92, it was still a nice 4-point ride up to the target. Okay. You never had any thought of trading towards the short target. Now, if this current candle closes below the BBC and trades below this low and below this low, then you have a window of opportunity down here. However, you expect that area to be support. So you really want to wait till price gets below that zone before you short to the target. Now, these are last week's zones. Why? Because the zones come out Monday morning at 6:15 a.m. Eastern. Published the zones since December 14th of 2009. So any alerts issued last night, and there was a few, those are based on last week's zones. Any of the alerts that came out today in the alert channel after 6:15 a.m. Eastern, those are based on this week's zones. On tomorrow's broadcast, you'll see this week's zones on my chart. Okay. These were the zones that were in play last night when the logic alerts went out and when the CTA alerts went out. No reason in the world that a person would not have been able to get their goal for the day if they understand the basic stuff I said when I showed you this earlier. Price gets above the 30-minute BBC, it's trying to reach the long target. Price gets below the 30-minute BBC, it's trying to reach the short target. Got to look left to spot potential obstacles, learn how price behaves around a weekly trading zone, and of course resist the urge to make it more complicated than that. Trading is not easy, but it can be simple. Now this pullback, there's a greater probability of it holding than not holding. But we do know that eventually price will trade through the BBC and start building legs in the other direction. See, on the way up, we had a leg and a retracement, and a leg and a retracement, and a leg and a retracement, and a leg and a retracement. Leg and a retracement, a leg and a retracement, a leg and a retracement. Now this candle has 12 minutes left in it. If we close where we are right now, or higher, the pullback held. If we close below the BBC, but the candle itself is still touching the BBC, then it's still holding. Well, how do I know when it's no longer holding? That would be when you have a red 30-minute candle open and close below BBC. See that right here. This candle opened and closed above the BBC. So, ready to take action on this candle or this candle. Okay. So, you got to be patient. You got to exercise self-discipline. Price is above the 30-minute BBC. It's trying to get to the long target. Once it's below the BBC, it's trying to get to the short target, but you got to look left for obstacles. Okay. And this week, we got a zone right in here. That would be potential support. If price can trade through that, then it's got a chance of making it down to the short target. Or the pullback may just hold. If it holds on the way up, because the step line and blue and climbing have gotten directly above price, then those could become potential resistance. So the window of opportunity would be up here. From roughly 43.01 to 43.04. It's 3 points, $150 per contract traded. If earn the right to trade 10 contracts, $1,500. Word of caution. Do not trade real money until you first follow what's in the 24/20 blueprint. Put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, then the blueprint will give you the green light to go live with one contract. That contract will be funded with your startup capital. Now your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add a second contract. Big difference is your second contract is funded with profit you earn in the market. Blueprint's going to notify you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when it's time, and you only add with profit you earned in the market. Now, just because the blueprint says it's okay to add an additional contract at this point, you should never feel compelled to, okay? Maybe you've been cruising along at 3 contracts for a while and you're doing good and you're reaching your goal every day. And then the blueprint says, okay, now you can add a 4th. If that makes you uncomfortable, then stay with 3 until the idea of 4 no longer makes you uncomfortable. Okay? You're not trying to prove anything to anybody. Your goal is to simply build a profitable trading business. And so we start out with a firm foundation by putting together those 10 consecutive days in a row in the demo account, in the simulator. And then you build you build the walls brick by brick. One contract, profit from that contract pays for the second contract. Profit from those 2 contracts pays for the third contract, and so on and so on. If you have the discipline to follow the formula as it is written in the blueprint, it'll make it much more difficult to blow up another account. Basically, you'll have to break the rules as they're laid out, both in the live training room and in the blueprint, to blow up another account. It's not impossible. You can do it. Again, you'll have to ignore an awful lot of good advice. So, all right, let's go to the Dow. The Dow opened here. The vertical line separates today, Monday, which began last night at 6 p.m. Eastern, from Friday, Thursday. Okay. So we opened first 30 minutes with a big green candle, but we had red and falling overhead, and we know that represents resistance. Price pulls back. It's above blue and climbing. The fact that it doesn't pull all the way back to the BBC. Well, let's just say I would rather see it pull back and hold, but you work with what you got. And so you get above blue and climbing and the step line. This candle opened at 33,850. And we ran up to 33,880. That's 30 points, $5 a point, $150 per contract traded. Then price got below blue and climbing. Pull back to the VVC. It held for 1, 2, 3, 4. And then on this candle right here, just barely opened below the VVC and closed below. So now you do start thinking about the short side. This candle retraced. You got a leg and a retracement. Remember, that's how price flows. And then you get a leg, okay? And then you get here off that 10 a.m. news, we get a run up that collapses. We get a pullback to the BVC, the pullback holds, and then down we go. This candle opened at 33,760. And at 33,740, you'd have had your goal for the day before you hit this potential support. Now, price managed to trade through that potential support. Now what you've got is you've got a 1, 2, 3 triple bottom. And what's that based off of? This low right here from Friday. So before you continue trading short, you need to see price take out this area. Look left, you got some pretty smooth sailing right down to the target. Unless there's a current weekly zone in the middle, and then that would be potential support. In fact, there's a current weekly zone here, so that would be potential support. Could you get your goal for the day on the way to that zone? You betcha. And then if you get on the other side of that zone, then it's smooth sailing down to the target. The chart will always tell you what you should do or not do and why. Okay? This was a red candle on Friday, but it found support right there. Market has a memory. And when price came back to that point today, it held as support. And then it held as support. And then again it held as support. That's 1, 2, 3, 4 times. That will remain support for eternity or until price breaks through it. Price flows the same across all markets and all time frames. On the Russell, this was the opening candle. It took us above blue and climbing. And if you went along here, well, you just might have got stopped out. Okay? That's as much a part of trading as breathing is a part of life. Once red and falling kicks in, price drops to the zone, consolidates. You get a little spike up here, but the candle itself is still touching the zone. And we finally get below the BBC. We open and close below the BBC. And then this candle here opens at 1829.5 and drops to 26. So, I mean, there's 3 points there. $50 a point, $150 per contract traded. We pull back up to the BBC and got all this room down to the target. Looks pretty simple, huh? It's not easy, but it can be simple. If you have someone to show you how to do the job, someone to provide you with guidance and mentoring, support, these are all things that we provide. Trying to learn how to trade by just reading a book or watching some YouTube videos, and we have nothing against books and nothing against YouTube videos, but they're no replacement for a live instructor. Someone who can answer your questions live in real time as they're taking off trades. Now look what's happened. Red and falling has turned to blue and climbing. So if price were to drop, now price did drop, and red and falling had curled directly under price. And so no surprise, that became support. And gave the market a nice bounce. Now it may come back down to test blue and climbing again, which we expect to be support until proven otherwise. If price gets below blue and climbing, then we've got all this area here to trade down to the short target. We already hit it once, we could hit it again. Right now, price is trapped between support and resistance. Is there enough room to trade from 8.15 down to 8.13 and get your goal for the day? Yep, sure is. Whether you want to take that trade or not, it's entirely up to you, but it's an opportunity. But you got to respect, this is going to most likely be support when price gets there. At least the first time it touches it, as evidenced by the previous 30-minute candle. And you want price to take out the current low. That's why I suggest 18. Did I say 18.15? Yep. 18.13. I wouldn't recommend trying to take more than 2 points out of that trade. Get your goal for the day. Go do life. In Q. Here's where we opened last night. We got below the BBC. We had red and falling. And bang, we dropped right to the target. Pull back to the BBC, the pullback held, hit the target again. This time, the pullback to the BBC held for 2 candles, and again, we know eventually it will trade through, but then the pullback held, and off we go. Price climbing the back, blue and climbing, and the step line. This candle here opened at 14,568. We'll call it 14,570 to be conservative. 14,570, 24. That's 50 points. At $20 a point. It's $1,000 per contract traded. 70, 24. It's 54 points. 50 points at $20 a point. $1,000 per contract traded. And this one candle, just to the target. Now it traded through the target to the zone. When price drops to a zone, we expect support. When price rises to a zone, we expect resistance until proven otherwise. Resistance. 70% of the time, price will consolidate when it hits a zone. Like this, and like this. 20% of the time, price will get rejected at a zone. 10% of the time, price will slice through a zone. Okay? We trade every market exactly the same, because price flows the same across all markets and all time frames. Now, we had a huge gap open on crude last night. Okay? This is where we closed Friday. This is where we opened last night. And price always reverts to the mean. In our case, the mean is green. We call it the BBC. There we go. Price consolidates along the zone in the BBC. Gets above red and climbing, red and falling, which turns it into blue and climbing. And so this candle, even this candle, opened at 72.92 up to 73.29. $400 per contract traded available in that one candle. Now we found resistance at the zone here, and we found resistance at the zone here, and then again here. Now the zone is $71.95 / $72. Below, $72.02. Now these are zones that were issued last Monday morning at 6:15 a.m. Eastern. So once you become a member and you're able to put the zones on your chart before Wall Street even wakes up for the week, don't throw out the old zones just yet. Because as you can see here, last week's zones have carryover power into the new week. Usually by Monday night, Tuesday morning, the new zones have fully kicked in. So we're below the BBC, we're below red and falling. Last week's zone could be support, 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 support. So would I trade this area? Not much of a window of opportunity. 72.29 to 72.19. A break of that low, and then an exit before you hit that low would be enough to give you your goal for the day. This area. Right here. $72.30, 72.20. That right there. is $100 per contract trade. And then if it takes out that low, well, then you got another window of opportunity. Right there. All right. And then the short CTA is way down here at 70.35. Gold. Here's where the market opened last night. Got below red and falling. Okay. This candle right here opened at 61.5 and dropped to 59. That's $250 per contract traded. Oh, wait, no, I'm sorry. It opened 61.5, put in a low at 59.60. So was that $140 per contract traded? We pull back to the BBC, and then we hit the target. Pull back to the step line, or pull back to the step line. Pull back to the step line, and we hit the target again. And then the zone from last week, from last Monday at 6:15 a.m. Eastern, support, 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 support. The zone from last Monday, resistance, 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 resistance. That's consolidation, remember, 70% of the time. That blue and climbing has gotten directly above price. So if this candle runs up, you should expect resistance at blue and climbing and the previous swing high. If price can get above that area, well, then you have a very nice window of opportunity up here. If price starts dropping to the BBC, we expect to pull back to hold, and then that will give us an opportunity to trade back up to this zone. Silver. Here's where we opened last night. Down we go to the target. Only takes a 2-penny move in silver to get your goal for the day. Opened at 23.64 and dropped 58. That's $300 per contract traded. When price gets below the target, pulls back up, pull back, holds, down we go again. We get above the BBC, red and falling turns to blue and climbing. So where we find resistance? At the zone, and chance we may find it at the zone again, right here. Now the step line has crossed blue and climbing, so as we find resistance at this zone, that may give us a pullback to the BBC. When the step line crosses blue and climbing, expect a pullback to the BBC. When the step line crosses red and falling, expect a pullback to the BBC. Doesn't matter what market, price flows the same across all markets and all time frames. And the euro. Here's where we opened, right here. Get below red and falling. From 0.95. So about a 90 tick drop, takes 80 ticks to make your goal for the day. The price pulled up to the BBC, dropped to and through the zone, pull back to the BBC, drop back to the zone, the target, and then the zone where we expected to find support, and it did. Now, I said only 3 things happen at a zone, the most common being consolidation, 70% of the time, rejection, 20% of the time, the slice, 10% of the time. See how this candle sliced through the weekly zone like it wasn't even there? When that move runs out of steam, it will typically retrace to the zone it sliced through and then continue in the direction of the slice. perfect example. So now what's happening? Price got a red candle. Potential support here. These previous lows at the zone. And then the BVC. And if the pullback to the BVC holds, then we'll trade long. If the pullback to the BVC doesn't hold, then once we're below this bullish cross, then we'll trade it short down to the short target. Once you understand our methodology and strategy and how to read our indicators and how to use the zones, you'll always know what to do or what not to do. And knowing what not to do is probably more important than knowing what to do. If you can learn to not do the things you shouldn't do, well, the rest kind of just takes care of itself. So we're back to the daily chart, and now we've got a real doji there. Okay, remember we had a little green body? So this indecision among the institutions, it's clear as a bell. This new high that we put in today, that could be it for a while, or not. The pullback held, and the pullback held, and we get another pullback. It may hold, may not. We'll trade what's in front of us every single day, the way we've done for many, many years. CFRN rolled out in 2005, and our live trading room has been ongoing since 2008. Every trading day. Someday we'll go get a life, but not today. Today we'll just keep doing what we do. To become a lifetime member, no recurring fees, no upsells, and no nonsense. Go here, eminifuturestrading.com. That page is pretty self-explanatory. A couple mouse clicks, you're a lifetime member, and you will have everything a trader needs all under one roof at one low price. No fine print, no funny business. Lifetime means lifetime. If you have questions, call Valerie, 949-42-EMINI, or send an email to support@cfrn.net. And we'll wrap this up with our good word for the day. Last week on Thursday and Friday, we talked about change your thinking, change your trading, change your life. We're on a roll. Let's stay with it. Proverbs 1:5. Let those with understanding receive guidance. The book of Proverbs begins. These are the Proverbs of Solomon. Their purpose is to teach people wisdom, to help them understand the insights of the wise, to teach people to live disciplined and successful lives, to help them do what is right, just, and fair. These Proverbs will give insight to the simple, knowledge, and discernment to the young. Let the wise listen to these Proverbs and become even wiser. Let those with understanding receive guidance. It's Proverbs 1, verses 1 through 5. Creative thinking is simply disciplined thinking. If you think you know all there is to know, then you already know everything you're going to know. You know what? That was Friday. Got my notes duplicated. All right, let's talk about something else. Whatever you're doing right now, whatever it is, does it glorify God? 1 Corinthians 10:31. Whatever you do, do all to the glory of God. This was supposed to be for tomorrow. When you're about to do something and you're not sure if you should, ask yourself, will doing this glorify God. If you follow that rule, you won't go wrong in life. Let's get specific. If you earn money honestly, then it's yours to spend as you wish. Once you give God his portion, you get to choose what you will do with the rest. Boy, when we went to church Saturday afternoon, I could not have been more proud of little D. I work in guest services. But he came to me. He said, "Grandpa, where do I find the tithe envelopes? Do they?" Because, online giving is the big thing now. Most places, most churches got a website. They got a link you can click and pay online and blah, blah. But, of course, got to have a credit card for that. Well, he just graduated high school. He doesn't have any credit cards. I hadn't even thought about a tithe envelope in years. But he graduated Friday, as many of you know, because I talked about it. And people were kind and gave him some money. So without me prompting, without my wife prompting him, when we entered the house of the Lord, first thing he wanted to do was go find a tithe envelope so that he could give God the first fruits of his labor. I was more proud of that than the graduation itself. He graduated a year early. But the things that since he's lived with us, that we've tried to teach him and instill in him, and prior to that, his parents in Uganda taught him and instilled in him, they took hold. And to see him take action, man, proud moment. Once you give God his portion, you get to choose what you will do the rest. However, your financial decisions have consequences that affect not only you, but your family. When you go into debt that you can't repay, they suffer with you. So does your reputation with others. The question is not whether you can afford it, but will it bring glory to God? Will he be pleased? And how about your relationships? You're single, lonely, and longing for companionship. So you find someone you really like. Today, when unchecked passion leads to sex before marriage, society doesn't blink at it. Society encourages it. But as a redeemed child of God, you are different. Jesus said we are in the world, but not of it. That means we live by a different set of rules, scriptural ones. Perhaps your partner will see your refusal of sexual intimacy as rejection. They might even decide to leave you. What should you do? Ask yourself, will this glorify God? Will he be pleased? Now, you might say, pleasing God isn't easy. Never has been. The Bible doesn't say it will be. But if you want to live with joy, self-respect, confidence, and integrity, you have to choose the right path. And that's the path that always brings glory to God. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.